My name is Will from KOSEC, Kodari Securities, and today I'm going to be talking to you about the Moving Average Convergence and Divergence, or as it's more commonly known, the MACD. This is probably one of the most well-known technical indicators, which is used by professional investors all around the world, as well as the team here at KOSEC to spot trend reversals, as well as gauge how bullish or bearish an investment price action may be. We use it to time entry and exit points in and out of stocks or other investments, and used correctly, it's an indicator which can help you confirm a winning trade, as well as spot a major reversal which could lead to huge gains. Again, it is important to use technical analysis to understand the market conditions, to find areas of value based on price movement, as well as to identify entry and exit triggers.
So as always, any information given is general in nature and does not take into account your personal needs or objectives. For further information, visit our website, www.kosec.com.au. So what are we going to be discussing today? What are we going to be going through? Well, first and foremost, we're going to be talking about what is a MACD. We're going to look at how we're going to use it to better time entry and exit points and how it actually applies to investments. Then I'm going to show you some very good practical examples of well-known ASX listed companies. And then we're going to look at how we can combine it with other indicators so that we can better time entry and exit points to maximize profit and minimize risk. So what is a MACD? Well, as the name would suggest, it follows the convergence and divergence of two moving averages. When the two moving averages are converging or moving together, it's showing a weakening trend. When the two averages are diverging or moving apart, it's showing a strengthening trend. Now keep in mind that these trends could go in either direction, so the MACD can be used to either go long an investment or go short. There are two lines in the MACD, and when the indicators cross, it can mean that a big trend change is coming, and at that point it could provide a sell indicator. When the MACD falls below the signal line, it is a bearish sign and can be known as a Southern Cross, or even by some institutions, a death cross. When the MACD goes above the signal line, it's called a bull cross, and it is a bullish sign. Some people call that a Northern Cross. So how do we actually work out the MACD, Moving Average Convergence and Divergence? Well, there's two lines, as I said before, okay, the MACD line and the signal line. So the MACD line is the 12-day exponential moving average, or EMA, minus the 26-day exponential moving, or EMA. The signal line is very simply the 9-day exponential moving average of the MACD. So it's relatively straightforward. However, in most cases, it's a very commonly used indicator, so most professional charting platforms will actually have it pre-populated with exactly these metrics, these ones right here. So now let's take a look at what this is going to look like on an actual chart. Now most charts will come out with something a little bit like this. At the top you'll probably have your price action and your little candlesticks which will indicate to you the price action on a day basis. Then at the bottom you might have your average true range, which is another technical indicator we use here at KOSEC. Then you're going to have your stochastic, which is a pre-indicator or a leading indicator, and then we're going to have our MACD, which is this one right here, and you can see these two lines. Now for the ease, I've actually enlarged it through here, so you can see I've kind of gotten rid of all the other mess, and we're just going to focus on our 2 points here, which is going to be the actual price action and then the MACD down here. Now, as we can see, this blue line, yeah, okay, that's the MACD line, and our red line is going to be the signal line. Okay, so we can see that very clearly. Let me just get rid of these marks. Okay, we can see that when the MACD crosses down, okay, it is a signal that potentially the stock might go into a negative direction. We can also see that right at this point here. We can see the stock's going down, and lo and behold, we can see right there that there is a Southern Cross, or the death cross, as we said, of the MACD. That means it's going down through the signal line. Now, on the upside, we also have another sign here, so we can see that at this point here, we go into a nice little rally to the north, and as you can see, the MACD then crosses over and crosses up through that signal line, moving to the north. So you can see that it is a good indicator of a potential buy or sell signal. Ideally, we want to buy things when they're low and sell things before they start going down. Now, we talk about the convergence and divergence. So as you can see here, yes, there has been a cross, okay? And then we can see that the two lines are now converging. They're moving apart from each other, okay? This is a good sign. This is showing there's potentially a strengthening trend. And as you can see, the market's going up. This is an indication when we start to see the two lines moving apart more, it's showing a strengthening trend. So it means that you're on the money with your buy or your sell entry. Once again, here we can see we saw a cross, okay, and then we can see that we're seeing a divergence there, and that means our trend is strengthening. So let's take a look at our first practical example, and today we're going to be using Commonwealth Serums Laboratories, commonly known as ASX code CSL. Now, as we can see, the movement to the north throughout here has been very good. Okay, everything's sort of been going up in that direction. Okay, what we don't want to be doing is we don't want to be caught in this sort of area down through here where we're actually moving sideways. Now, this is an opportunity cost because a savvy investor will look at that and say, I could be putting my hard-earned capital somewhere else. I don't necessarily want to be involved when the market's doing that, but I don't really want to be involved when the market's doing this. So let's look at our potential buy, or let's look at our potential sell signal. So we've come up through here. We've seen a cross on the MACD right here. It's probably just going to be at this point right here. We'll use it with other indicators, and then we can see that we've gone very solidly up to the north through here. And we're seeing, remember, we're seeing a diverging or moving apart moving averages at that point there. That means the trend is strengthening. So that's our buy signal. Now looking at our sell signal, because that's one of the most important things, okay, we can see here we've started to move off, and ideally we want to try and avoid this, and we can see right here we're seeing that death cross or that southern cross with the MACD, and as you can see the next movement is into a southern direction. We can see that we've gone down for quite a bit of time. Now remember, this is all charts that we look at are always going to be in the 1 year time frame, and each candlestick is going to equal 1 day. So this period here, that's actually a very, very long time where the market's been going down. Remember, this is September here, October, November, December, and then we go into January. So that's a very long time that we've been sort of moving into a negative direction. So now let's take a look at our next practical example, and this one is going to be Wesfarmers. So that's the ASX ticker code WES. Now Wesfarmers, a business, as we can see throughout the year, we started off there and we finished off in pretty much the same space. This would be from August to August, or 1 year time frame. Okay, and as we can see, this stock has moved relatively sideways in that time. I think most people would agree with that. We started off and finished off in relatively the same place. However, if we can time it very well and time it correctly, then we can make many trades on this and we can lock in profits as we go along. So let's look at our potential buying opportunity in and around here. Okay, this would be an ideal time to try and buy. So we're looking for a buy signal, and that is going to come with that MACD cross. The MACD is crossed up through the signal line, and as we can see, the movement has gone to the north. Our sell sign is potentially here. Okay, we're seeing a southern cross. Now at this point you can see that it does do a southern cross through there, then it goes back up again, which is why it's so important to use in combination with other indicators. So there has to be other indicators that can support a potential sell. But as we can see right at this point here, we've seen the sell signal, we've seen the MACD cross in a negative direction. We've seen our famous southern cross or death cross, and then from there things have gone into a negative direction. So let's take a look at our next example. This is Cochlear, ticker code COH. This is a business here. It has nice big upswings, but it also has quite sharp pullbacks. So ideally, savvy investors want to time the upswing, so they're getting involved in the stock, putting long positions on in the stock when it goes up, but they're also not going to risk capital by getting involved in the stock when it's going down, exiting out, reducing risk, as they say. So here, the stock is very, very low on its range. Okay, this is providing us a potential entry point because the stock's low. We think this is Cochlear is a good quality business, and we want to see if we can time that entry. We don't want to have it trading sideways. We certainly don't want to have it going down any further than that. I mean, those are the things we're trying to avoid. So we're looking for a confirmation of a potential buy, and it's going to come right here. Okay, as we can see, we've seen that cross on the MACD. Okay, remember the stochastic will work first, and then the cross on the MACD right there. Okay, we put our buy opportunity right there when it hits that top Donchian channel, combination with other indicators, and then we can see it moving very quickly to the north. Okay, at this point here, we're seeing it run out of steam. We're seeing the MACD cross down through the signal line, moving back into a negative direction. Okay, and everything sort of from here we can see moves into a southerly direction from here. So we want to really capitalize on this section here, making our money and then getting out before we go sideways for too much longer. Now remember, the angle at which the MACD cross also shows the bullishness of the price action. What do I mean by that? So if we have a very, very sort of shallow cross like this one here or this one here, where there's not really that much of a cross like this one here, then it's an indication that things are just slowing down. There's no real sharp price movement. However, if you see a very, very strong cross like this one right there, then that's an indication that the price action has changed direction very, very quickly, like this one right here. Okay, we can see that that is a very sharp angle to be going down through. Okay, and it's confirmed. Like there's no question that is different. That's a cross moving in there. Okay, and we can see that the price action is reflecting that with a very sharp movement to the south. So for our final example, we're actually going to look at how we can combine the MACD with other indicators. And today we're not going to actually use a stock. We're actually going to use an index. So we're going to use the Australian stock market, the XJO, which is the ASX 200. So what are we looking at here? Now this is something we can use to sort of get an overall picture of where our index is heading. So obviously at this point here, the market's come all the way down. We've seen some big bearish days. Okay, what we're trying to find is at which point we can enter into the market and potentially see it moving backwards, because if we bought on this dip here, yes, we're going to go up very slightly, but then we're going to come straight back down again, and then we're actually going to end up trending a bit sideways. So that's about 2 months where we could utilize that capital somewhere else. So we don't necessarily just want to jump in at that point there. We want to see a confirmation. What we're going to do, a confirmation of a buy. And what we want to do is use the MACD to do that. And we're going to combine that with other indicators. So the first thing we're going to look at, okay, is the stochastic. So the stochastic is this one down here, okay, and it will always be the first one to move because it's reflective directly of the price. So as you can see, as soon as the price starts moving up, this is going to cross. However, not necessarily the most reliable, because it is dependent on what's happening on a day-to-day basis. So there we go. We've seen that cross though. That's looking quite attractive. Next thing we're going to look at is the MACD, and that's going to cross. So we've got the cross here. We've got the cross here. Okay, so those are 2 points that are lining up. That's good. Okay, then we're going to see our volume. We can see our volume is starting to go from negative over to positive. That's another tick. Okay, and then we've gone above the midline of the Donchian channel, which we discussed in another video. Then you can see we've touched that top Donchian channel. From there, okay, our conclusion would be we have got 1, 2, 3, 4, 5 buys or confirmations, okay, and that is where we would take our long position. As we can see, we move to the north from there. Let's take a look at another example. We're going to go right over to the right-hand side of the screen. So we're going to go start with here. We've seen our stochastic crosses. Our stochastic always crosses first. Next, we're going to be looking at our MACD cross. We're also noticing that this at about the same time, we've actually flipped into positive territory with our volume. We've crossed through that midline of the Donchian channel. We've hit the top Donchian, and then we're going to move into a positive direction from here. A couple of things of note, okay? Once again, whenever we see a converging or we see the MACD moving apart, getting wider, it's a good signal. It's an indication that potentially things are moving into a positive direction and they're gaining momentum into that direction.
So in summary, today we've gone over the MACD, what it's used for, and we've identified some very well-known examples, and we can see how we can combine it with other indicators to maximize profit and minimize risk. This video was brought to you by KOSEC, Kodari Securities. Thank you. Have a nice day.